U.S. Chamber of Commerce warns of mounting risk of doing business in China. China woo Mexico to gain an edge over the U.S. U.S.-China flights are still down 94% after China opens borders. China's largest shipping company, COSCO Shipping Holdings, halves first quarter revenue.
The U.S. Chamber of Commerce, a leading business lobby group, has issued a statement warning of the rising risk of doing business in China as the Beijing regime has dramatically increased scrutiny of American companies, saying a matter of serious concern for the investor community. The statement, released on Friday, April 28, said that the new counter-espionage law in China, which gives broad powers to the Beijing regime to access documents, data, or materials related to national security, has created a lot of uncertainty and risk for foreign investors. It said, in the context of China's new counter-espionage law, which casts a wide net over the range of documents, data, or materials considered relevant to national security, the additional scrutiny of firms providing essential business services dramatically increases the uncertainties and risk of doing business in the People's Republic. The chamber also urged the Chinese Communist regime to consult with foreign businesses on implementing the law and provide clear guidance and answers to their questions. The warning came after the Financial Times reported that Chinese police had raided the Shanghai office of Bain, a U.S. management consultancy, and questioned some of its employees. It also followed the detention of 5 staff members of Mint Group, a U.S. due diligence firm in Beijing last month. The Chinese regime's cybersecurity watchdog launched a probe of Idaho-based tech firm Micron's products sold in the country last month. U.S. officials believe the move from Beijing is retaliating against Washington's sweeping measures to cut off China from obtaining advanced semiconductors. These incidents have raised concerns among U.S. officials and executives about the apparent crackdown on some foreign businesses in China, especially those involved in risk assessment or advanced technology supply chains. The U.S. Chamber of Commerce said it welcomed China's pledges of openness and reform, but added that foreign investment will not feel welcomed in an environment where risk can't be properly assessed and legal uncertainties are on the rise. When the U.S. and Mexico are at loggerheads, experts warn China won't miss its golden chance. Eric Farnsworth, vice president of the Americas Society and the Council of the Americas, told Fox News, China's relationship with Mexico is not terribly strong, but the more the relationship between Mexico and the United States deteriorates, China sees opportunity there. It is known that Chinese investments have increased significantly in the North American nation, with shops set up near the border that sell China-origin products under the Made in Mexico tag. This March, China funded broadcaster CGTN outwardly. China has invested in a wide range of sectors in Mexico, but recently capturing attention is lithium, a key battery component. The nations haven't announced any deal yet, but experts are particularly curious about the Mexican government's bill passed on April 18th. According to the report, the legislation seeks to nationalize lithium. However, its terms are vague and the country lacks technology, drawing speculations of Chinese involvement. Executive Director of the Center for Secure Free Society, Joseph Humeyer, said the reason they want to nationalize all this stuff is they want to have state control over it so they can facilitate a state-to-state contract with China. Humeyer argued that direct government-to-government agreements are more convenient than entrusting a private firm that handles foreign capital to conduct open auctions. He said that state-to-state deals depend on how close two countries are. China can outbid U.S. private firms by paying more foreign assets and gaining influence. While Beijing has increased its spending recently, its share of direct foreign investments in Mexico was only 8%, or less than $1 billion as of 2021. In contrast, the U.S. remained the biggest investor, grabbing almost 43% of all foreign investments with $15 billion. Evan Ellis, a Latin American Studies research professor at the U.S. Army War College Strategic Studies Institute, called it a cautious investment, suggesting that Beijing might be aware that Mexico is still a conservative nation. Ellis, nevertheless, warned, and yet China recognizes Mexico's strategic value. Mexico is in many ways kind of the strategic buffer between the U.S. and Chinese investment and influence and all the rest of the Americas. He continued, the danger is in economically weakened Mexico, politically more fragile, less transparent, and with more corrupted institutions, doing business with China in a way that allows China to advance in a predatory fashion and influence the political classes. Data shows that travel between the US and China is slow to recover after prolonged flight disruptions caused by the COVID pandemic. Nearly 4 months after China reopened its borders, nonstop US commercial flights to China are only 6% of what they were before the COVID pandemic. Nikkei cited aviation analytics firm Cirium reporting that only 85 flights were scheduled on 10 routes from the US to China this month, compared with 1,506 flights on 50 routes from the US to China on October 4, 2019. Airlines in both the US and China have reduced flights since the outbreak of COVID. Air China flights from Los Angeles to Beijing were reduced from nearly 3 per day to just 5 throughout April. American Airlines is currently operating only one US-China route from Dallas to Shanghai. Industry analyst Henry Hardevelt told Nikkei that compared to other countries in the Asia-Pacific region, the Chinese market may have the slowest rate of return. Meanwhile, the revenue of flights from the US to other countries in the Pacific has grown well. United's Pacific passenger revenue came in at $962 million, up 324% from the first quarter of 2022, and it was the airline's most significant revenue increase in the region to date. United has also opened 3 new routes between the US and Japan, reopened 2 other routes that had been dormant since 2020, and resumed flights between Hong Kong and San Francisco. United also plans to significantly increase flights from the US to Australia and New Zealand late this year.
China's largest ship company, COSCO Shipping Holdings, released its operating results on April 28th. According to Daji Yuan, in the first quarter of 2023, the company's income fell by 55.13% and net profit fell by 74.2% over the same period last year. COSCO said that in the first quarter of 2023, the decrease in container shipping was the main reason for the company's income plunge. In the second half of last year, the prosperity of China's shipping industry began to decline. As a result, in early April, several security firms lowered their operating expectations for COSCO. After reaching a peak in early July 2021, COSCO's share price continuously shows a downtrend. On July 7, 2021, COSCO's share price peaked at nearly $3, 20.45 yuan per share. After that, its value continued to slide down. On October 10, 2022, it reached a record low of $1.33, down 51.37% in value. The decreasing business performance of COSCO indicates that China's economy is stagnating after suffering the consequences of CCP's zero-COVID policy based on lockdowns for 3 years. COSCO is a state-owned enterprise in China. In September 2019, the United States imposed sanctions on COSCO subsidiaries for their involvement in illegal oil shipments to Iran.